Well, I'm going to get started here today. This is a tough day to do this webinar because we got probably one of the bigger reports of the year coming out tomorrow. And what we will do is we will have another webinar tomorrow afternoon. We'll probably do it recorded, so when you get our daily report, click on the link on top and take a look at it. But we're just trying to stay consistent in here and putting things out on every Tuesday. So we're just going to make a few points in here, right now. I guess the biggest thing, we need to take a look at is when you look at this May supply demand report coming out tomorrow, what it is the first look at the new marketing year. Okay, we're going to incorporate the March acreage. They're going to put most likely a trend line yield in place, and then we look towards the ending carryout levels, both from a U.S. and a worldwide standpoint. And the one thing we need to keep in mind is that things are going to change. Okay, this is a starting point. This is a good base on where we're going to be sitting at. As we look back to last year, I guess there's some things that really stick out, and this is with corn, as last year's report was also on May 12th. Okay, and on that first supply demand report of the year, the USDA pegged corn carryout for this marketing year at over 3.3 billion bushels, and world carryout at 340 million metric ton. Okay. On May 12th, a year ago, we had D's corn futures at 336. Today, we've got July corn at 730, and ending carryout is almost a full 2 billion bushels below what the USDA projected here a year ago. When you look at the world carryout, that dropped from 340 million metric ton down to 284 million metric ton. That's a 56 million metric ton difference. When you look at metric ton and converting it to bushels, it's not quite as 1 million metric ton equals 39.6 million bushels of corn. But if you just figure it around 40 million bushels, the world ending carryout dropped about 2.2 billion bushels. 2 billion of it was here in the U.S. Okay, so this supply demand reported tomorrow is going to give us a good starting point. But as you can see from a year ago, expect some changes. As we look to tomorrow's report, we got D's corn futures right around 615. The average trade estimates pegging corn carryout at 1.344 billion bushels with world carryout at 283. Essentially, all the estimates for this next year's marketing year is where the 2021 crop ending carryout is being forecasted at right now. As I switch over to the bean side of it, we've also had the dramatic drop off in ending carryout levels and the increase in price. A year ago, we had new crop November bean futures at 857, and the USDA forecasted ending carryout at 405 million bushels. Today, we're looking at old crop ending carryout at 120 million, and you've got futures prices that have nearly doubled, with July beans above $16. Again, just like corn, the world carryout declined as well from 98 million metric ton down to 87. So what are we going to look at here this next year? Everyone's kind of thinking that ending carryout level can get bumped up a little bit to 138 million bushels. I believe that's logical. I actually think it's going to go up a little bit higher than that, because if we consider 120 as pipeline minimum, okay, I think the USDA might even put it a little bit bigger than that. On the worldwide basis, they're basically saying production is going to match demand, and world carryout's going to hold at 88 million metric ton. The biggest change from last year to this year is when you look at prices, and you've got November beans at $14.30, almost $6 a bushel above where November bean futures are at 1 year ago. Now, as I just look at a few quick weekly charts in here right now, this is corn. I mean, we've had a dramatic rally over the last 3-4 weeks in here with front month corn futures jumping $1.50 a bushel and trading in the $7.50 to $7.75 range right now. I mean, if you want to look at the next upside target, the all-time highs at 843 3/4, okay, is what the bulls would end up going after. When you look at a chart like this, though, it is also a reminder that with favorable weather, and if we do see a little bit of slowdown in demand or some demand rationing, we can also quickly roll this thing back down and get corn back down to $6 in the front month contract as well. When I just glance over at the bean weekly chart, okay, again, it had to move like corn, but it wasn't as dramatic as what we had in the corn market. The all-time highs are just shy of $17.95 in the drought rally of 2012. If we have some weather issues, okay, I'm sure that's going to be that next target. as I look at wrapping things up in here, and again, just being short because we have such a big report out tomorrow, and I plan on getting a webinar out tomorrow afternoon as well, is that this tomorrow's report is a starting point for the entire crop year. Okay, that's is going to be our baseline, but there are changes to expect, and not only are we going to see a change in yield as we move forward, whether weather's favorable or not favorable, we're probably going to see acreage increase as well. Typically, when we have higher prices and a drier spring, acreage is going to expand. Our thinking is both corn and bean acres can easily jump 2 million acres from that March report. The other thing we want to quickly point out is there's a lot made in the news media, and rightfully so, that this Brazil corn crop is getting smaller as they do have a significant drought down there. Well, if we lower the second corn crop 10 to 15%, we're going to drop about 10 million metric tons off of the Brazilian corn crop. That's 394 million bushels. Okay, easy figuring, let's say it's about 400 million bushels this Brazilian corn crop has dropped off in size. But we think that corn acres here in the U.S. are going to increase by 2 million acres. And at 180 bushel national average yield, we could bump up our production 360 million bushels just as we move forward, okay, on the supply-demand reports. Our acreage will not get adjusted until the end of June, so we need to keep that in mind. Right now, the big question is, are we rationing any demand? Okay, we had some Chinese buying of new crop corn. Old crop demand seems like it's relatively stable. We're not getting any major reductions in demand sitting here today, but I believe as we look ahead, if prices are going to stay elevated, we are going to see some, demand rationing going on. Now, as we look ahead, we're going to get this report behind us, and then it comes down to weather. Okay, weather is going to be the driving factor. Right now, today, we have to say that weather is relatively favorable. If you have questions, feel free to type them in or send us an email in here. And like I said, we're going to do one of these webinars here tomorrow to highlight the supply-demand report. It will probably be, though, after the market close, but once we get it out there, we will let you know, and as always, the link will be on our daily advisory report that's sent out in the afternoon. Thanks for tuning in, and have a great day.